All right, let's talk fintech. Because if you've been following the market lately, you know it's sending some seriously mixed signals. I mean, one day everything seems to make sense, and the next you see headlines that just make you scratch your head. So today we're going to try to make sense of all this chaos. And this quote just hits the nail on the head, doesn't it? It feels like one of those days. You know, where a company misses earnings, gets slapped with a lawsuit, and somehow its stock price goes up. How does that even happen? So yeah, that's our challenge today. Let's make it make sense. We're going to unpack three different fintech stories that seem to be playing by completely different rules and see what they tell us about the market we're in right now. Okay, first up, let's dive into the world of crypto. The exchange Gemini just had a week that honestly is the perfect example of all this confusion. I mean, just look at this. On paper, the news for Gemini was objectively awful. They missed their earnings targets, and not by a little. Plus, they got hit with a class action lawsuit saying they misled their investors. You'd think this would be a total disaster for their stock, right? Well, that's not what happened. Not even close. Instead of tanking, Gemini stock actually jumped nearly 10% in after-hours trading. I mean, this is the literal opposite of what any textbook would tell you should happen. And this brings us right to the heart of this paradox. In the crypto world, sometimes the market trades less on the spreadsheet and more on, well, the vibes. The feeling among investors wasn't about the bad numbers. It was more like, okay, yeah, this is bad, but is it FTX bad? And since the answer was a clear no, the vibes stay positive, and the price went up. And this is a perfect example of what you could call vibe-based trading. In a space like crypto, bad news is sometimes just news. What really seems to matter is the bigger story, the narrative. As long as people still believe in the long-term potential, the market can just shrug off headlines that would absolutely sink a traditional company. And speaking of narrative, it's literally baked into the company's DNA. The Winklevoss twins named it Gemini after the NASA program that paved the way for the moon landing. It's all about that feeling of exploration and new frontiers, a perfect brand for the crypto world. Okay, for our second story, let's pivot from a market that's all about vibes to one that is very much about the spreadsheets. Let's talk about UP Fintech, better known as TIGR. Now, on the surface, TIGR just had an absolutely killer quarter. We're talking record revenue, record net income, and really strong user growth. By all the usual metrics, this company is firing on all cylinders. But, there's always a but, right? There's a catch hiding just under the surface of all those great headline numbers. And here's the problem in a nutshell. While TIGR's revenue is flying high, their expenses are flying right up there with it. The amount they're spending on marketing and getting new customers is climbing just as fast. So this makes investors ask that classic fintech question. You're looking at this and thinking, okay, cool growth, but is it sustainable? Can you keep this pace without just lighting a giant pile of cash on fire? And TIGR's whole situation, it really points to this huge shift in the entire economy. That era of easy money, of zero interest rates, where you could grow at any cost, that's over. Now, the name of the game is efficient growth. It's not enough to get bigger. You have to get bigger without breaking the bank. Which brings us to our third and final story. This one offers a completely different playbook, one that isn't about short-term vibes or expensive growth, but is all about patience and playing the long game. Let's talk about Greenlight. They were just named the Financial Education App of the Year. And that award isn't just a nice trophy on the shelf, it is their entire strategy. So for anyone who doesn't know, Greenlight is basically a financial toolkit for kids. Think of it like training wheels for money. It's a debit card and an app that lets kids spend, save, even invest a little, all while their parents can supervise. And their strategy is so simple, but it's also incredibly powerful. Step 1, get your users when they're young. Step 2, earn the trust of their parents by being a safe, educational tool. And if you do those two things right, you get the ultimate prize, a customer for life. I mean, that's the whole philosophy. If you can be a kid's first and most trusted financial tool, you are perfectly positioned to be their bank, their credit card, maybe even their mortgage lender 20 years down the road. It's a game of relationships, not just quick transactions. So let's pull all three of these stories together. What do they tell us about the state of fintech right now? It really seems like the market is big enough and weird enough to support all these totally different playbooks at the exact same time. This table really lays it all out.
You've got Gemini, showing us that in the wild west of crypto, the story can still matter more than the spreadsheet. You have TIGR, which is the new reality for so many companies. Sure, growth is back, but it comes with a big bill. And then you've got Greenlight, playing a totally different game, the slow, patient game of winning a customer for life.
And all this leaves us with a pretty big question to think about. In a market this chaotic, where that easy, grow-at-all-costs model is dead, is playing the long game the only real way to win anymore? Something to chew on. Thanks for tuning in.